You ever feel like you're just standing there with your money, trying to decide, stocks over here, crypto over there, which way do you actually go?
Oh, yeah, that feeling. It's pretty common, being a bit overwhelmed by the choices. And that's exactly what we're digging into today.
Right.
We got this YouTube video someone shared from Pushkar Raj Thakur, stock market educator O.
Okay.
The title is Stocks vs. Cryptocurrency, Where to Invest Money for High Profit.
Hmm.
It's in Hindi, comparing the two.
Gotcha. So our mission today basically is to pull out the key stuff from that video. Like, what are the real differences, the similarities between investing in stocks versus crypto?
Exactly. Get you those insights quickly without you having to watch the whole thing.
Perfect. So the video starts with a pretty neat analogy, right? About marketplaces.
Yeah, it does a really good job there. It uses that simple idea.
Yeah.
If you want vegetables, well, you go to a vegetable market.
Makes sense.
And then it just applied that logic. The stock market. That's your marketplace for buying and selling bits of companies, the shares.
Right, right. And just like you've got different places to buy groceries, there are specific places for stocks. The video mentions NSE, BSE in India.
Yep, the National Stock Exchange and Bombay Stock Exchange. They're like the main hubs, the big established markets for trading stocks there.
Okay. And then how does crypto fit into that market idea?
Well, it draws a parallel. Just
Mm.
like stocks have their market, cryptocurrencies, Bitcoin, others, they have theirs too. And you use crypto exchanges for that.
Ah, okay.
The video even mentions the CoinDCX app as an example, like a digital place to buy and sell crypto.
So that app is kind of like your digital market for these coins. Okay, so you buy this stuff. Where does it actually, go? Where is it kept?
That's a really key difference they highlight. For stocks, you don't get paper certificates anymore. They're held electronically
Mm-hmm.
in what's called a demat account,
Do not.
dematerialized account.
Right.
But for cryptocurrencies, you hold them in a crypto wallet. And often the exchange you use, like that CoinDCX app they mentioned, might provide the wallet itself.
Okay, so DMOT for stocks, digital wallet for crypto. Makes sense. Now, something that comes up a lot with crypto is manipulation. People worry the prices just jump around wildly.
Yeah, that's a huge perception, and the video definitely acknowledges it, that feeling that crypto markets can be, well, easily swayed.
Uh-huh.
But what's interesting is the video also says, hey, wait a minute, the stock market isn't completely free from manipulation either, especially, the smaller companies,
Yeah.
small caps.
Oh, okay. So it's not just a crypto thing. These smaller company stocks can be pushed around too.
That's what the video suggests. Big investors, sometimes called operators, might have enough clout to influence the prices of those smaller stocks.
Hmm.
But it does draw a distinction. It's often easier to manipulate smaller cryptocurrencies because their overall market size is just, well, smaller compared to giants like Bitcoin,
Hmm.
or definitely compared to large company stocks.
Right.
So it's kind of similar, like in both markets. Manipulation is more likely with smaller players, small cryptos, small cap stocks, than the big established ones.
That makes sense. Size matters. Liquidity matters. Okay, another big contrast people talk about. Regulation. Crypto feels kind of like the Wild West sometimes compared to stocks.
That's a really crucial point the video hammers home. It states very clearly the stock market has a regulator. In India, that's SEBI, the Securities and Exchange Board. They set the rules.
Right.
Cryptocurrency. It's largely unregulated right now. There isn't that central body overseeing everything.
And the video mentions the implications of that, right? Like what happens if rules do come in later?
Exactly. It raises that question. Future regulations could definitely change how the crypto market works. And, without a regulator like SEBI, if something goes wrong with a crypto investment, your options for getting help might be more limited.
Yeah, definitely something to think about. Okay, but the video did find a similarity too, surprisingly, about just getting started. You don't need a fortune.
That's right. Accessibility is actually quite similar. The video points out you can start investing in both stocks and crypto with pretty small amounts,
How small are we talking?
like as low as 100 rupees in India, according to the video.
Wow, okay, so that barrier to entry is quite low then for either path. Interesting. Okay, let's talk long term. How does the video frame investing in stocks versus crypto over, say, years?
Yeah, it presents different perspectives. For stocks, the traditional approach is what's called fundamental analysis.
Right. Looking at the company's health.
Exactly. Checking its financials, its past performance, its management, basically figuring out if it's a solid business likely to grow.
Yeah.
Like checking under the car's hood before you buy it.
Okay, so profits, debt, track record. But the video says doing that same deep dive for crypto is Tricky.
Very tricky because crypto is so new, relatively speaking. Many coins just don't have that long history, that track record to analyze fundamentally.
Hmm. So without that history, how do you judge the long-term potential? What does the video suggest?
Well, it kind of suggests that maybe for the big established cryptos like Bitcoin, you could consider a long-term view. But for most others, given the volatility.
The wild price swings.
Exactly. Because of that volatility, the video leans towards suggesting a shorter-term perspective might be more appropriate for a lot of cryptocurrencies.
And it had some pretty direct advice linked to that volatility, didn't it?
Oh, absolutely. Very clear advice. Only invest money in crypto that you can genuinely afford to lose.
Wow. That's stark.
It really highlights the higher risk level compared to, say, investing larger sums in more established stocks, which are generally seen as less volatile over the long run.
Okay, that's a critical takeaway. Afford to lose. Now, what about what you're actually buying? It feels different owning a stock versus owning crypto.
It is fundamentally different. The video explains when you buy stock, you're buying a share, a little piece of ownership in that company. You become a shareholder.
Right. Your fortunes are tied to the company's success in a way.
Yep. Now, contrast that with crypto. The video makes this interesting comparison. It says investing in crypto is more like buying and holding, say, gold.
Oh, like an asset,
Yeah.
not ownership.
Exactly. You're holding a digital asset, hoping its value goes up. You're not owning a slice of a business that generates profits in the same way.
So more about the asset's perceived value, maybe its scarcity, which actually the video mentions scarcity too, doesn't it, for Bitcoin?
It does. It points out that some cryptos, Bitcoin being the prime example, have a limited supply. Only so many will ever exist.
Ah.
And that scarcity, just like with gold or other precious resources, can drive interest and potentially value.
Okay, so for some cryptos, limited supply is a big part of the story, whereas for stocks, it's back to company performance, profits, balance sheets.
Precisely. The video really underlines that difference. Stock value is tied to business fundamentals. The value proposition for something like Bitcoin is linked more to its scarcity and the underlying technology.
Right, the technology, blockchain. The video touches on that too, its future potential.
It does. It acknowledges that blockchain is new, potentially revolutionary.
Sure.
And it keeps an open mind about Bitcoin's future because of that tech and its limited supply.
Mm.
But it also notes, hey, this doesn't have the long, proven market value track record of traditional assets.
Got it. Okay, so let's just quickly recap the main points from this video comparison. We've got the marketplaces, how they work.
Demat accounts versus crypto wallets for storage.
Right, the whole manipulation angle possible in both, but maybe easier in smaller corners of each market.
The huge difference in regulation SEBI for stocks, much less for crypto right now.
Accessibility being surprisingly similar. You can start small.
Yeah, and the different takes on long-term investing fundamental analysis for stocks, more caution and maybe shorter-term views for many cryptos due to volatility.
Plus that core difference, owning part of a company versus holding a digital asset, kind of like gold.
And finally, the role of scarcity for some cryptos versus company performance for stocks and that underlying blockchain tech.
So yeah, both have potential, clearly, but they also have very different risks and things you need to consider.
Absolutely. And just understanding these basic differences is
Yeah,
like the essential first step before you decide anything.
definitely. So here's the thing to chew on then. Thinking about all these differences and similarities, stocks, crypto, and considering your own situation, like how much risk you're comfortable with, what your goals are, how do you see these fitting together or not in your financial future? It's definitely something worth pondering and maybe doing a bit more research on for yourself.